what's up guys? Welcome to the Momentum Trading Lab. Please remember to hit that like and subscribe, and let's get into it. Alright, so we have a new monthly candle. So let's start on the monthly chart for today, and I'm going to start with the dollar index. So if we just first off have a look at the Momentum Master B indicator, it looks like the dollar is bullish. Just if we look at the oscillator, so the momentum is pushing to the upside, and then the Williams, which is our strength indication, is also curling to the upside, and then the RSI is slightly indecisive. It's just floating around in the middle here. So let's have a quick look at the price action as well. So let's quickly fill in all of our levels. So first off, on the monthly chart, we had this imbalance, so that dipped into this, and then we also had sell side liquidity below these relative equal lows. So that's going to be major liquidity pools. So that's the sell side on the monthly. Right, and then we have clear displacement to the upside. So on the monthly, we broke into bullish market structure. So this would have been the very last lower high. Just call it MSS. Okay, so that's clearly displacement to the upside. So that is a bullish market structure shift after taking the sell side liquidity. Now we have this imbalance right here, and we have yet to reach the midpoint. So let's pull that in with our Fibonacci tool. Right, so we just broke into this fair value gap. The midpoint is right here at 107.719. But considering the fact that we are coming from sell side liquidity and this imbalance, we could likely expect it to go and take the buy side liquidity above this high. So this is our buy side on the monthly. This level is at 114.778. And let's also get the standard Fibonacci for this impulse to the upside. Okay, so we just pierced into the discount area. Just missed the Fibonacci 618. But the key thing is it came into discount, and price moves from discount to premium and from premium to discount. So considering it came from discount over here, we can now also pull a Fibonacci from this high to the low. And we have not broken into the premium side for this leg to the downside. And then we also have the Fibonacci golden pocket right there at the top of the monthly fair value gap. So definitely on a monthly chart, it looks like the drawn liquidity is definitely to the upside. So we'll have to see if we break through the midpoint of this fair value gap. Then we could go and visit the buy side liquidity at 114.778. Right, so that is the monthly chart. Let's remove that for now. And let's go down one time frame. So in yesterday's stream, we discussed the fact that we had 11 straight green weeks for the dollar index. And on this candle, it kind of to me looked like this was a potential raid of the liquidity above this high. So I was just looking at that candle. But now it's looking like we are displacing above this high, which tells me that it's going to the next high to go and anti-liquidity right there. So this is the buy side liquidity on the weekly. This level is at 107.993. So we already rated the liquidity above this high. So my initial thought was that with this candle, it kind of looked like a reversal candle. So my initial thought was that we would retrace a little bit into discount, potentially towards this low, and just snag up some sell side before continuing to the upside. Okay, and then we have this imbalance. So this is probably more or less in the same area as the monthly. It is more or less. Okay, so the midpoint is right there. So let's see how it reacts off this level. So I'm going to be watching if it can break through the lower quadrant of this fair value gap. The lower quadrant is also just there, so I kind of want to see rejection on the dollar right here at the midpoint of the fair value gap at 108.844. On the momentum, it's starting to get topped out. Looks like the MACD is indicating it could still push to the upside a little more, and then the Williams is also running out of strength. So the dollar is looking extremely bullish right now. So we have to kind of expect that the dollar is going to go and reach for this high before retracing back into a discount. Drop one. Okay, the 4 hour still has momentum left. The momentum and the strength is pushing to the upside. And the normalized MACD as well, and the RSI is still aggressively pointing to the upside. It looks like it wants to displace above this high. Already I have the imbalance right there. Let's quickly see what happens. So they brought it into the liquidity pool. And then started to displace to the upside. So this fair value gap will be confirmed in a little less than 7 minutes. And to me, this looks like displacement above this high. So that also tells me that it's reaching for higher prices. So it looks more likely that it's going to go towards that high and maybe towards the mean of the fair value gap on the weekly chart. See what the 1 hour is doing. Okay, so that's the imbalance on the 1 hour. So we have the imbalance on the 4 hour and the 1 hour. That makes it more probable that it will kind of come back to reprice that imbalance. Okay, so the imbalance on the 1 hour. The mid of that fair value gap is right there with the Fibonacci 618. So the 1 hour is getting extended, and we'll have to see what the next 4 hour candle does. But it seems likely it will, after this impulse to the upside, retrace a little bit, perhaps into discount and into this fair value gap before continuing to the upside. Quickly have a look at the momentum master light. So look at the 15 minute. Okay, so the 15 minute looks like it's rolling over. The MACD and the RSI is a little bit indecisive, but this looks like a bearish divergence printing on the RSI. So we have a high and a higher high, and then this white and red line is the RSI. So we have a high and a lower high. And it looks like this MACD, although it's giving the blue bullish print, it looks like it can start to roll over at any point. And you can see this is kind of weak upward momentum. It looks like it wants to roll over. And then you can see the bearish divergence on the Williams, which is the strength indication. Might give that a thicker line. You have a high and a lower high and a high and a higher high. So they could retrace. You have this low right here, so they could just dig it into the smaller liquidity pool, the sell side liquidity, and then push it to the upside. But it looks like it is getting ready for a smaller retrace, perhaps into this imbalance before pushing back to the upside. Alright, that's it for the dollar. Next up is the Nasdaq. Let's also start on the monthly. Seeing that we have a new monthly candle. All right. So on the monthly, let's fill in all of the levels. Imbalance on the monthly, we just previously touched it right there. And let's also actually want to use the Fibonacci for this imbalance. Okay, so that midpoint of the fair value gap is at 14,106. Okay, the monthly is not giving a lot of information. I should probably go to the continuous chart for this. Let's go to NQ1. Okay, now we have a better picture. So the monthly is basically just doing the opposite of the Nasdaq, or on the opposite of the dollar index. Put that over there. The oscillators is overextended. The momentum and the strength looks like it is starting to run out. And then the money flow, the purple line, is above the RSI, which is a bearish indication. But normally the strong bearish indication is whenever you have the money flow above the RSI and far away from it. So we don't have that condition right now. Okay, so let's fill in the levels. First off, just want to quickly pull a fib from this high to the low. And that almost looks like a 886 retracement. Went up right to the 886, then got a little bit of rejection. Monthly. Okay, so that's good that we came to the continuous chart. So we have this monthly imbalance and it's not been filled in yet. Move this to the side. Okay, there was a little bit of an imbalance, so they came into it and moved out of it. So that one should be rebalanced right now. This is your bearish order block. So you have consecutive up close candles, then a move down that took out the low. So that is a valid bearish order block. Just quickly see where it came back to. Okay, so I couldn't really push past the order block, just came past the mean threshold and then started to come back down again. Okay, so we had a nice push to the upside. Seems like it will have to come back to the monthly fair value gap. Seeing that it looks like the Dixie is on its way to the upside to reprice this imbalance on the monthly. We could kind of expect the Nasdaq to come down into this imbalance. Go down to the weekly. I want to quickly see something on the Okay, so I'm gonna go back to the December contract for the weekly. Okay, so we already came from this imbalance, and then we also had those relative equal lows on the daily. So the sell side liquidity resides below relative equal lows or retail support. And then they just came into it, knocked it out, started to move to the upside. Back to the weekly. So now we have this imbalance that we've been looking at. It was just not confirmed last week. So now we have a confirmed imbalance right there. Okay, so the equilibrium for this impulse to the downside is right in the middle of this imbalance. So I think it will move to the upside a little bit towards the midpoint of this fair value gap and into premium before going down to that monthly imbalance that we discussed on the continuous chart. Let's pull this one back in. Okay, let's go to the daily. Daily is still oversold. The money flow pointing to the upside. Okay, this was the little imbalance that we were looking at last week. At some point, that was the draw on liquidity for a particular day last week, and we went into that liquidity pool. Now it looks like we are printing a high. So on this candle, we have a high, then a lower high on this one, and a lower high on this one. This one is not confirmed yet. We have about 4 hours for this candle to close. Interesting thing is we've not taken the previous day high or low, so there's still liquidity built up above and below these levels. So that's the previous day high. Previous day low. See, we've not taken any of the liquidity above the high or below the low. Okay, so we came into the imbalance. This was the weekly, right? So weekly imbalance. And then we have the previous day high right in alignment with the bottom of the weekly fair value gap. Go to the 4 hour. Okay, so just kind of consolidating in between the previous day high and previous day low. Okay, so here on the 4 hour, we have an untouched imbalance. So now we have a weekly imbalance at the top with built up liquidity above the previous day high. On the 4 hour, we have an imbalance right here with liquidity as well underneath the previous day low. Okay, so here we had this is a new week opening gap. So this is where we closed on Friday. This is where we opened on Sunday. So that's your new week opening gap. So I already came into it. It was a little bit more clear on the 15-minute. We'll have a look at that in a moment. So my initial thought this morning was that they would bring price below the relative equal lows to knock out the liquidity, reprice the imbalance, and then push it to the upside. But instead they came towards the equal highs right here. So then got displacement to the downside. So that tells me perhaps for the afternoon session, because price action moves from buy side liquidity to sell side liquidity. So now that they've taken some buy side liquidity, seems likely they would push it to the downside, to perhaps go and take that previous day low, and then also the liquidity below the relative equal lows. So right now we have three lows. We have that one right there, that one right there, and then this new one right there as well. Okay, so liquidity purge got a strong reaction to the downside. So see, we couldn't displace above these highs. So that's an indication that it was a liquidity raid. Copy this line. Okay, so to me, it looks like it perhaps during the afternoon session, they bring it towards the sell side liquidity. And then perhaps we tomorrow or somewhere during the week, we go and touch the previous day high, which is right now at 15,060, and perhaps go and touch that weekly fair value gap before continuing to the downside. So look at the 15-minute. Okay, so the 15-minute has got a bit of a bearish pattern as well. So it went into the buy side liquidity, displaced to the downside below the previous low. So that's a bearish market structure shift on the 15-minute. Then you had this imbalance that came into it. It printed a high. So on this candle you have a high, and then on either side there's lower highs. You can see it looks like it just wants to drop. There's a fair value gap right here. We'll have to see if it gets respected. This might turn into an inversion fair value gap, so it will break lower and then kind of test this as support before going into the sell side liquidity below the previous day low. Okay, so perhaps, so according to my entry model, I want to see a liquidity raid before I enter. So I would like if we can take some short-term liquidity and then displace from this level, and then for instance on a 2 or 1 minute, look for a bearish market structure shift with a bearish fair value gap to enter in, and then the target will be the previous day low. And then once we get into this area, we'll take profit. And if we get displacement on a lower term time frame like the 1 or the 2 minute, then we can go long again. But it looks like the we'll probably be looking for short in the afternoon session. But it looks like the bigger moves will be the short. Let's see. So I think this might just dig into that fair value gap again. Just purge some liquidity above the high before continuing to the downside towards the previous day low at 14,811. JT asked if I would be trading the afternoon session. I do trade the afternoon session, but I'm very picky with the setups during the afternoon. So for instance, today I didn't get to trade the morning session. I had some other things going on, so I missed the morning session. So I'll still observe the entire afternoon session, and if my entry model presents itself, then I will definitely take a stab at it. But it is Monday, so obviously from Tuesday the trading conditions is more ideal than on a Monday. All right, so that's what I'm looking at for the Nasdaq. Let's just quickly look at the Forex Factory and see what upcoming red folder events we have for the rest of the week. Okay, so for today we had at 10 a.m. we had the ISM manufacturing, and then at 11 we had the Jay Powell speaking. So tomorrow we have a red folder event at 10 a.m. So right at that silver bullet time window, the Joel's job openings. And on Wednesday, just before 8:30 at 8:15 we have the non-farm employment change. 10 a.m. is the ISM services PMI. Thursday we have unemployment claims at 8:30, And Friday at 8:30 we have the average hourly earnings, non-farm employment change, and then the unemployment rate. So lots of volatility in the market, so just be careful around these times. So I like to, if I'm in a trade, so just before 10 a.m. I would close it and then see what happens at 10 a.m. and let the craziness play out, and then take some trades from there again. So there will be more liquidity in the market this week with all the red folder news, so there should be lots of opportunities for us to make some money. Alrighty guys, that's my analysis for today. Like I said, I will be observing the entire afternoon session, and if I see any good setups during that silver bullet time window, then I will most definitely post it in the Discord. Alright, thank you everyone for tuning in today. That's it for me. I will see you guys in the next one. Thank you for watching.